Let's do it again.
Oh, that's true.
What's good, my people? It's your boy Daniel Flex here. Welcome back to the channel. Apologies for that little week delay between the episodes. I was in Dubai doing an absolute madness, but we're back here with the Easy Effects series. This is Trading for Dummies, episode 5. We're going to be covering way more concepts in this episode and kind of picking up where we left off. Just before we get started with this episode, make sure you're in the Discord. The Discord is going to be the first link in the bio. We've got a little free community there following along with the Easy Effects Trading for Dummies series. I'm going to be doing weekly calls in there, helping you guys out. Any questions you have, anything that you need assistance with, we're going to be covering that in the Discord. And I also know that Sam is doing weekly calls as well in there. So it's completely free. Like, we're not trying to sell you anything. There's no upsell. Just like chill, hop into Discord, have a little community, and yeah, it will help you out with your trading journey. So Sam, in the week that I was in Dubai, how was your trading going? Like, what's been happening for you?
Yeah, so a lot's been going on, as I'm sure some of you watching this may know. It's been eventful, to say the very least. So against a lot of people's advice, I decided to get a funded, because it was only like $30 of equity. So I was just like, fuck it, like, it's not that deep, even if I blow it. And then essentially, so went in there, not really knowing what to expect. And then, yeah, made a few profitable trades, got up to like 344. And then I think you went to Dubai, and then I got up to like close to 700. And then I fucking blew it yesterday, just completely fucking blew it because I decided to trade NAS. And now, as you have informed to me, you know, you need to calculate your lot size depending on which market you're in. And yes, yeah, it was a costly lesson, but at the end of the day, it's only a mistake if you don't learn from it. So yeah, I'm feeling fucking good, to be honest with you, about everything.
Cool. So just explain to the people in a little bit more detail, just in case they haven't seen the TikTok that you posted. But what did you actually do to lose the account? How did you violate it?
Okay, so the breach was daily loss, which breached $432. I believe I lost 450 altogether. So I lost a little German 30 trade in the morning for around about $60, I believe. And then I went into the NASDAQ and thought I saw a position. It then started reversing on me. And my major mistake was miscalculating the lot size, which I now have learned from. Well, not yet, but you're going to teach me in this video, of course. But I'm able to look at the error that I made. So essentially, it was just not realizing the difference in lot size between going to different markets. Is that am I correct in saying that?
Yeah, essentially it's less the lot sizing and more the pip count, just because NASDAQ is essentially US 30 stretched out. So a movement that happens in US 30 that might be 100 pips will be like 300 pips on NAS. So if you're trading the same lot size, you're essentially 3x in your risk without realizing, because you're not calculating your pips.
Yeah, it makes perfect sense.
Yeah, so were you calculating your lot sizing, or were you just putting in numbers that you felt were appropriate for the account size?
This is, yeah, to be honest with you, I was not calculating, which, yeah, I was not calculating. I was just kind of putting in numbers that I believed was appropriate for the account size. When I got to like 0.6, and then I realized I was risking like 1%, I was like, oh, calm, I can just stay with 0.6. But then obviously got fucked yesterday because of NASDAQ. So, yeah.
Well, yeah, definitely not the way forward. Like, you do want to be calculating your lot sizing every position. Otherwise, you're going to start to vary a risk. Like, sometimes if your stop loss is bigger, you're going to be risking more in a position. If your SL is tighter, you're going to be risking less. Which is why there's no fixed stop loss size and there's no fixed SL size. It varies per position because you have to calculate it based off the context. On a long enough time frame, even if you're profitable, even if you're winning like 75% of the time, for example, if your risk is varying per position, you're actually not as profitable as you might think, because like maybe sometimes your SL is a little bit bigger, which means your risk is a little bit higher and your reward's a little bit lower. So like you make a 1.2, but instead of making 2%, you make 1.7. And then on the next position, you have a tighter SL, and it hits TP and it's a higher RR or whatever, and it just your numbers don't add up the way they're meant to add up. So like you're not making 2% on a win and you're not losing 1% on a loss. It's always slightly above or slightly below. So at the end of like the year, for example, that adds up to a couple of percent, and like maybe you're
compounds.
Yeah, maybe you're missing out on 15-16% profit.
So just so I've got this right, with the NASDAQ here, so you said it's like stretched out US 30. So like, are you talking about the actual like price itself, or like the candle, or like what is that
essentially everything? So the volume is a little bit higher and the pip count is a little bit higher. So if I share my screen right here,
Yeah, sure.
you can actually just directly like measure the amount of pips that price is moving. So right here on TradingView, you have the measure tool. So you see right here, if I'm on a 5-minute time frame and I measure, like, for example, just 3 fairly bullish candles, it's around like 600 pips right here. It's quite a decent amount of movement. Bear in mind, it's pretty high volume at the moment. We've had quite a big move today. Then if I go to something like NAS and I look at this movement right here, this is actually the move that stopped me out earlier. But if I go to this movement right here and I measure also 3 candles, you see this is like 900 pips. Granted, also pretty high volume candles, so it's relatively similar. But I'm trying to use both impulsive moves. You see, it's just a slightly higher pip count, so it's an extra like 300-400 pips. So if you're using the same sizing, it would just mean that you're actually risking a little bit more because of the movement.
Yeah, okay, that makes sense now. And it varies from like market to market. So would it be different in the S&P 500, for an example?
100%, yeah, it'd be different. Same way on German 30, it would also vary slightly. So you find, like, again, 3 candles, and this enters the thousands, and you see how this.
Okay.
That's why German 30, your position sizing is always much smaller because it just moves way more pips.
So definitely fucking important stuff.
100%. Yeah, that's why you always want to be calculating your position before. What I recommend is anytime you come to enter a trade. So let's say I was looking at taking a German 30 long, for example. I would put my position on the chart. I would put my SL where I need it to be, put my TP where it needs to be. Once I have my 1 to 2 weighed out and it's around my entry, I'd then look at this number, and based off of this number, I'd do the calculation. Are you familiar with what the lot size calculation is? Like, do you remember it?
No, I haven't. Cool. I haven't.
The lot sizing is always going to be based off of your contract size. Your contract size can be found on the broker's FAQ section. So you're trading with Equity Edge, Alpha have the same contract sizing, FTMO have the same contract sizing, but it varies from prop firm to prop firm, and it varies from personal broker to personal broker. But usually, if you go onto their website, or furthermore, directly on MetaTrader 5, if you still use MT5, you can click the little icon, the information icon, and it will tell you what the contract sizing is. So usually, the contract sizing is either 1 or 10. Now, it's a massive difference between the two, because that 1 or a 10 is going to be the difference between putting a decimal point and not putting a decimal point. For example, if the contract sizing is 1, that means that whatever this number is what you're actually risking. So let's say this is 2.5 thousand pips. If the contract size is 1 on this position, risking a 1 lot, I'm actually risking $2,552,000. That's my risk. If the contract sizing is 10, that means everything is multiplied by 10x, which means that my position is actually way bigger. So instead of using the 1 lot, I should be using a 0.1 lot, because the contract sizing is actually buying that for me. So very big distinction to make, because you can very easily over leverage if you're not looking at the contract sizing. For example, on TFT, which is the funded trader, they have the bigger contract sizing, which means you're always using like smaller lots. I use like 1-2 lots on a 300K account. In comparison to on Alpha Capital Group, they have a smaller contract size, which means I usually use like 80 lots, for example, which is the contract sizing here. Furthermore, there's a contract sizing, which means that you're actually missing a decimal point. So instead of this being worth 2.5 thousand, it would be $250 per 1 lot, if that makes sense. I think that would actually.
Yeah, no, sorry, you cut out on that last bit.
Yeah, so what I was saying is sometimes you have a very small contract size. So instead of this being 2.5 thousand on the 1 lot, it would be $250, for example, which means you'd have to use like 50, 60, 70 lots to get your desired risk. An easy way for you to tell what your contract size is, like I said, you can do it on MetaTrader, or furthermore, what I'd recommend you do, and I kind of do this a lot, is you go onto MetaTrader, you place like a 0.1, drag down your SL, and then your SL will always be a variation of this. Like, it won't be a different number. It will always be either $25 or $250 or 2.5 thousand, or like, you'll be able to see what your contract size is based off of the amount you're initially risking. Obviously, do that with a very small lot size, so you don't blow it on side. Like, don't enter a 10 lot and try to guess it. Go like 0.01, but then you can figure it out, and it's just a case of adding a couple of zeros until you get that number. But it's a pretty easy calculation. If you're good with like maths, you can probably just do it in your head on a quick thing. They're usually like pretty easy numbers to work with. And that's why I always recommend like rounding your stop loss. So instead of using like a weird number like 2.304 or whatever, you just go 2.5 or you go like 3 or whatever.
Okay.
Just give yourself easier numbers to work with, but super easy. You can use a calculator, etc. Good to go. Never use the online calculators for risk calculation because they don't take into account your contract sizing and they won't know what your contract sizing is. Furthermore, that's how I blew my first FTMO account. I just parked my phase 2 on the live account, super excited to make money. US 30, I think it was short, and I was meant to enter a 1 lot, but I didn't know that the contract sizing was different. So I entered a 10 lot and like immediately blew it, literally within like 5 or 10 minutes. Furthermore, a different thing that actually happened, and this happens a lot of the time, is I entered the 10 lot. By the initial drawdown, by the initial amount that I was losing, I knew that I'd been over leveraged. I knew that, yo, I fucked up. I shouldn't be in this size position. But then I was thinking, oh, it's gonna come back. It's gonna hit my break even. It's gonna go into profit. When it comes back to break even, I'll shut it. Or furthermore, I might as well hold it and like just pass this account or whatever, make a fat payout.
That's literally what I did yesterday.
It's the mentality of like, I knew I made a mistake, but I refused to correct my mistake because I still thought it was gonna do what I wanted it to do. And I also didn't want to immediately hold like a 2% loss because it's just a bit peak. So I decided to hold it, and then the trade never went into profit, and it just blew my entire account because I refused to shut it. So major key in the future, if you do ever miscalculate your lot sizing and you clock it, shut it as you clock it. It doesn't matter. You don't wait for break even. You don't wait to go into profit. You don't try. You just shut it. That's a mistake. You shouldn't have done it. Close it. That's it. Hold the L, and that's your trade done for the day. You don't even re-enter the position with the correct sizing. That's you done. Hold your L and you move your day. But yeah, it happens, bro. Literally every trader will at some point blow their account over miscalculation on lot sizing. It's a very normal mistake to happen, especially as you move into having multiple accounts and varying from prop firm to prop firm. At some point, you're gonna get confused and you're gonna put this contract size here, and like you're gonna fuck it up. It happens. I've done it a bunch. It's part of the game. But all factors considered, is not the worst thing because you are on a one-step evaluation as well. I would never recommend the one-step evaluations. For some people, it's super beneficial, but generally speaking, the trading drawdown on the one-step isn't the best way forward, in my opinion. For you people at home who don't know what trading drawdown is, just explain it. Trading drawdown follows you as your trade moves up into profit. So let's say you have a brand new $10,000 account and you make $500 on a position. You haven't yet closed out that $500. It's still running in profit. You then move your stop loss to break even, so you cover your risk, and then the trade reverses and hits your break even. Technically, you've lost no money because you're at break even. Like you haven't made or lost money, but because you were in 5% floating profit, that floating profit goes into your drawdown. So as you reverse it and hit your break even, you've essentially lost 5%, which is your daily drawdown, and you violated the account, you've blown it. So with the trading drawdown, you kind of have to take profit and you can't let positions retrace on you, which a lot of the time is very annoying because sometimes you might just want to set and forget it. You might want to put your SR to break even. You might want to let a trade ride out for whatever reason, and the trading drawdown doesn't allow you to do that. The only real benefit is you can obviously pass a 1-step a lot faster than you can pass a 2-step. But again, I'd recommend just be patient, go for a 2-step and trade it on a long time frame. Cool, bro. Any questions? You look like you're going to say something right there.
I don't believe so. If it comes back to me, but I can't remember anything. That all makes sense. I mean, when you think about like, calculating lot size, it sounds all like, big or whatever. But now that you explain it to me, it's literally just go from the contract size and you'll be okay.
100%. And furthermore, once you've traded for a little bit, you'll just have a rough idea in your head of what your contract sizing is, what your lot sizing is. Like you won't need to sit there and consciously like do up a calculation every time. You just have it. So it does get easier. Sorry, right here, I might just seem a little bit distracted because I'm still looking at Gem 30. It's currently breaking out. This is the analysis that I sent out earlier on Instagram. I was looking for price to break structure here and kind of continue to the upside. You can see this right here is a trade that I took yesterday. I got absolutely violated on this position. It was very unfortunate. I held it for 16 hours. And then I had that one candle right here just about to take me out. And then it proceeded to rip pretty much to my take profit, which is a bit of a mistake, but it happens. Furthermore, I'm showing you guys this because number one, it happens. Like I've been trading for years, 5+ years. This shit still happens to me. It's part of the game. It's part of the process. A lot of traders don't show like annoying positions like this, but like I feel like it's important to show you that because it still does happen. I lost $4,500 on this trade on my TFT account, which was 1.5%, and I lost 1.5% on my Alpha Capital Group account as well, which is around 3,500 or just under. So like almost 8K total loss on this one position. Very annoying. It is what it is. I just wanted to show it to you. The reason I'm currently distracted a little bit is because I was looking at potentially taking an entry around here, this green line where I was looking at. It was based off of the 5-minute market structure shift right here. I was actually just speaking to Sam about looking at potential entry just before we started this recording. And I got a little bit distracted talking about some other things, and I missed my entry. And now price has just continued to rip, and it doesn't look like it's going to give me a re-entry. So it's just one of those where I kind of have to sit on my hands and just kind of wait. I don't think I will end up trading. Furthermore, what I'm going to do, and a little psychology trick for you guys as well, is if you've missed your entry, by the way, this is a nice trade I took as well. Once again, I got violated. I've gone 2 for 2 L's since coming back from the buy. It happens, whatever, minor distribution. I'll make it back this week. But a little psychology tip for you is if you've taken a loss and you're done trading for the day, because realistically you should only be trading once per day. So if you've taken a loss, which I have taken my loss for the day, and you're not meant to be trading again today, I'd highly recommend get off the charts that you're looking at. Because if you continue to look at like NAS, for example, when you just took a loss on NAS, the likelihood that you then convince yourself there's another position, and the likelihood that you then get some sort of emotional reaction and you re-enter a position is exponentially higher than if you just got off your chart. Because if you're on your chart, what are you on your chart to do? You're on your chart to trade. You don't look at it because it's aesthetic and you just like the visuals now. Like you're looking at it because you're doing technical analysis and you're looking for a position. So just the longer you spend looking at it, whether or not there's something over there, if you look at a chart for long enough, I can almost guarantee you 9 times out of 10, you're going to place a position. Or if you don't, if you happen to be super disciplined, which a lot of people aren't, the only thing you're going to do is just stress yourself out and increase your cholesterol. Because price is either going to show you what you wanted it to see, and it's going to piss you off because you're not in the position, or it's going to go against you and you're going to validate, oh, I shouldn't have traded anyway, in which case you're just wasting your time. So there's no benefit for you looking at it, so just don't look at it. So that's why I'm not even going to look at the indices right now, because it's kind of irritating me that nice position, because it's now ripping in my direction. So I don't want to just sit there and look at it go in my direction, because why would I do that? So I'm just going to look at the gold chart, and we'll use this as the demo chart today. Cool. Sorry, back to the point, because we've gone on a bit.
Solid advice, though. Solid advice.
Yes, sir. Yes, sir. Back to the point. What were we saying a second ago? Your account, you blew it. We've gone through the lot size calculation. Have you been journaling? Have you journaled your positions?
I should have been journaling them better, to be completely honest with you.
Where have you journaled?
I've journaled them on Google Drive, and essentially I have a bit of an issue because I journaled a few of them.
Yeah.
And if I go onto my Google Drive, I don't know what the fuck's going on, but for some reason it says, I don't know if you've ever seen this before, but it says your access is restricted. So it looks as if your account was created or used multiple accounts to violate Google's policies. Account might have been created by a computer or program or bot. So literally the ones that I have journaled, and I tried to take the steps, etc., and it sends it to a fucking text message that I no longer have access to.
Yeah.
So it's kind of peak, to be honest with you. But I think I have either a few here. Let me check. See. Yeah, no, I don't think I've really got any here, to be honest with you, which I should have been journaling a lot more, but yeah.
So a couple of things. Number one, on the Google Drive thing, it just looks like you've been blacklisted from Google Drive, mate. I don't know what happened. Maybe someone tried using your account or something along those lines. Regardless, it's not that deep. Just use the new email and sign up to Google Drive again, and I'll share that file with you, and you can start uploading in there. Second thing, you should definitely be journaling. Journaling is probably arguably the most important thing you'd be doing at this current stage. You're never going to learn from your trading if you haven't journaled. And furthermore, like your memory is not good to memorize the positions you've taken. I guarantee if I ask you what's the third trade you took on that evaluation, you've got no idea. Like maybe you can look back and think, oh, it was nice long, but can't quite remember the setup. I don't really know what I done. Why did I take profit here? Why is my SL here? Like you can't remember the details of it unless you happen to have like a photographic memory. And on a long enough time frame, when you've taken hundreds of positions, you're just not going to know what you've done and what you didn't do. And if you make a mistake, you're going to forget the mistake and eventually end up making it again. A little analogy I used to use with some of my older mentorship students is like, if you put your hand over an open flame and you burn yourself, what's to stop you coming back the next day and doing it? Is the memory of you burning yourself, because your brain recalls that you burn yourself. But if you then forgot, if I wiped your memory and you forgot that you burnt yourself, you'd probably at some point in time come back and do the same shit because you just don't remember doing it to begin with. And that's essentially what it's like with trading. Is on a long enough time frame, you're going to forget. There's too many positions, there's too much price. You're bound to repeat mistakes, and you're bound to just go in circles if you're not journaling. So super important. You can also get a lot of insights about your trading behavior, about your psychology. Like a lot of stuff can be learned from the not back testing that as well, but from the trade journaling. So I'd highly recommend. Future reference: any trade you take, screenshot the page, put it on Google Drive, and just put a little sentence about why you took the trade, why your SL is where it's at, what you think was going to happen, what played out, and how your psychology was at the time, what was happening, were you annoyed, did you just eat a fat burrito and it's messed up your stomach? Like, put in some variable factors you can track how you're feeling, how that's affecting your positions, and like track some data. That's literally it.
Okay, definitely. No, starting from today, because I blew that account, and I'm pretty sure, well, I'm obviously gonna get another one. Then I'll journal each trade. I actually, before we got into this, because my Google Drive got blocked, I was thinking of I'll upload them into a Google Drive as well, so you have access to them. But I created like my own personal Discord just for me, and I'm just going to put them all in there as well. So
yeah, sure. I mean, mate, however you want to track it, you can track it in it. It's not really massively important how you want to do it. But as long as you know your data and you can read it and you can see the position and you can see some info, then it's calm. So just track it how you want to track it, and we'll figure it out in between sessions of like how we're gonna show it on the videos and stuff like that. And then, but it's calm. Cool. Did you have anything that came up throughout your time trading the funded, or like what was your experience like with that? Did you have anything that you wanted to get some help with, that you like needed any assistance on, or was it all good, or how was it?
I believe in general, to be honest with you, I genuinely think it was quite good. I noticed that I felt utterly comfortable on US 30, and perhaps that is just because, you know, I had a 100% win rate on US 30. Every trade I took on there I won, so perhaps that's just why. But genuinely, I don't know, I just felt comfortable with like price action. And when I was deferred from it, like when I went to gold and I placed it in a position, I felt like, to be honest with you, this is how I felt. It's interesting. It's like when any position that I took that I lost, except from the one yesterday, that one I can wholeheartedly say I thought it was going to turn in my favor. Any position that I took which I lost, I felt like I just feel like I'm gambling right now, because I felt like I didn't hold myself to a standard that I should have before entering the trade. But I think it's good because I can at least reflect and recognize that.
Yeah, 100%. That's very interesting, because a lot of people don't have that self-awareness, and they're not able to consciously think, like, what am I doing currently in it? That's honestly a super important trait in trading, and it's a pattern that I've spotted amongst a lot of my students. The ones who usually progress the fastest are the ones who have the most self-awareness, and the ones who are able to like think in third person and be like, okay, cool, what am I actually doing here? Why have I actually done it? And they're able to criticize themselves and hold themselves to a certain like standard in it. So it is very interesting how you mentioned that. And for the people at home, I highly recommend, if you're going to practice anything when it comes to trading, is practice self-awareness, practice thinking your thoughts out loud and actually understanding, what am I doing? Don't ever be subconscious. Don't ever just act in autopilot. Like, always be very aware of what you're doing, especially when it comes to trading, because that's going to massively help you out in all aspects. Now, bro, just because I need to actually go to this car dealership and view this car, we're going to have to cut this session a little bit short because I'm just a little bit tight on time here. But hopefully you guys enjoyed this little session. I know it's probably brief. I don't know how long the video is, maybe like 20-30 minutes. But hopefully you enjoyed this little recap. We're going to leave you on a little cliffhanger here on the next session, which may or may not be tomorrow or the day after. We're going to be going through some smart money concepts, covering stuff like liquidity, order blocks, fair value gaps, psychological levels, and some other various concepts like volume and some other stuff. But yeah, stay tuned for that. Comment on this video if you're enjoying the series, if you're loving it, join up, whatever. I'll see you guys in Discord as well. Sam's going to be doing live sessions. I'm going to be doing live sessions. Tons more content coming. I'm in the process of making a psychology ebook as well, and some other like free resources for you guys. So like there's lots of stuff coming. So yeah, much love for being a part of the series. Comment, share the video, all of that stuff, and I'll chat to you guys later. Sam, anything else to add?
No, just I'm gonna, if I do place any trades this week in market, then of course I'm gonna journal them and then we can speak about them next episode. So that might benefit you guys. But anyway, see you guys in the Discord. Nice one.
Nice one. All right, blessed. And recording and stop.